The stock has had a roller coaster ride since its listing in July of 2021, hitting highs of 169 rupees post-listing, but also seeing lows of about 40 rupees in a year. But since then, a lot of water under the bridge. Markets are excited about prospects for Zomato. Stock is reflecting that. Manglam is standing by to talk to us about that journey of what we've seen so far. Manglam, over to you.
Well, as far as the new age companies are concerned, in that Zomato has actually scripted a compelling saga from a blockbuster listing highs to weathering storms of new age challenges and ultimately emerging fundamentally stronger than ever before. So let's delve into the riveting journey of Zomato itself, the rise, the fall and the resurgence as it were. First was the blockbuster listing that happened in 2021, offered at 76 rupees, the stock listed at 120 and soon after hit an all-time high of 169, captivating the market with its promise and potential. Then came 2022 and along with it, the challenges of all these new age companies. I mean, starting with the US interest rate hikes, the post-COVID lull in demand, there was low visibility of profits, senior level management exits, institutional investors and PE supply, as well as high valuation. So we saw a big decline in all new age companies' share prices, and Zomato wasn't any different. The stock hit a low of 40.5 in July 2022. But this was just the beginning of an incredible turnaround, which we now call the resurgence. Zomato's Phoenix-like rise was fueled by strategic moves. One was improvement in their operational metrics, focus on core growth engines of food delivery, and pairing all non-core businesses out. Their enhanced market share further aided improvement in their overall business. And that's not all. Robust growth and unit economics of their Blinkit business, which is Zomato's strategic venture, added further fuel to the growth engine as well. So here's the journey of the business in numbers. First up, we have the food delivery revenue that was absolutely consistent. And in that consistency, we had a strong turnaround in their food delivery EBITDA as well. From a loss of 113 crores, it gone all the way up to 204 crores. Secondly, from a solid growth standpoint, the average order value of Blinkit, which is now a value driver for the company, has crossed that 600 rupee mark. And in the previous quarter itself, it's turned contribution positive, contribution margin positive. And as a result of it, it's just a matter of time before this turns operationally positive as well. So let's talk about the key triggers that they have: increasing transactions and transacting customers, them also increasing their order frequency, higher loyalty and stickiness coming in from Zomato Gold members. They have, more share than Swiggy now. Swiggy's peak has been 52%. Now the market share is around 46 odd percent. They've been improving their operating metrics of the Blinkit business as well. And at the same time, they have a huge cash balance of close to 11,761 crore rupees on their books as well. Is the street excited by it? Are the brokerages giving a vote of confidence to Zomato? Yes, we have, nearly 86% of the brokers on the street have a buy or a positive rating on Zomato, with the target prices ranging anywhere between 130 to 170. So that's the story so far of Zomato: the rise, the fall, and then the resurgence.
All right, thank you. That's very well put there, Mangalam. So the rise, fall and the resurgence of Zomato. In fact, now we have the management of Zomato joining us, and of course Ramdev Agarwal of Motilal Oswal Financial Services is sitting by with us. Akshant Goyal, who's the Chief Financial Officer of Zomato, is with us right now. And Ramdev ji, you want to take it forward with Akshant?
Yeah. Hi, good morning, Akshant. Can you hear me?
Good morning, Mr. Ramdev. Yes, I can hear you, and thank you for having me on the show. And congratulations to CNBC on this 25-year milestone.
Yeah. So they are on run for 25th year. I think Zomato is, just about 2-3 years on the stock market. So, one of the bullishness I have from my side is that in looking at the global scenario, particularly US big 5, 7, 10, they're all digital companies, except probably Berkshire Hathaway. So, what do you think? I mean, this kind of, apart from Zomato, you are working very closely with digital companies. You have seen them working. So, is it likely that in next 10-15 years, we are going to see many more digital companies in the top 10, 15, 20 kind of ranking in India?
So if you look at the top 5-10 global companies, which you mentioned are the largest companies in US, likes of Google, Facebook, etc. They're, by the way, also, I think, fairly large in India, and their India business is likely to remain unlisted. So it's possible that, a large part of Indian digital tech market cap is never listed because of them being owned by these large players. Having said that, I do believe that we'll see a lot more new age companies coming from digitally tech-enabled sectors listing in the next few years. I think we saw one round of that happening in 2021 when 5-6 companies listed. And as the business models have become much stronger and economics have become better in the last 2 years, I do think there'll be a few more listings down the line, which will create more availability of tech digital businesses in the country which are listed.
You know, one other thing about Zomato is that not only in food delivery, you guys are duopoly kind of situation, but you have Blinkit also, which is on top of it growing very rapidly. So, but then still combined as a company, you are not made profit. So, is it a story of, it is a story full of hope that someday you will make money, because ultimately the stock market is about the next discounted value of future cash flows. So, what is your view on, you know, for how long one has to wait to see, within your own disclosed kind of numbers, can you guide us in terms of saying how exactly profit and profitability and profit numbers will start flowing in next 5-10 years also?
Yeah, so last, I think June quarter this year was the first quarter when at a company level we were profitable. We reported a small 2 crore profit after tax. And then September quarter that increased to about 40 odd crores, right? So company, I think as a group combined business is already profitable, and I think it's only going to increase from here as the businesses mature. And you're right, I think Blinkit is a relatively still nascent business. We need investment in that business for it to continue to grow. The top line of that business is doubling year on year, right? So I think it will be in that phase where it will take a while for that business to generate meaningful profits. But I think food delivery is shaping up well, and as a result, the sum of those two should remain profitable, and therefore the company at a overall level should continue to remain profitable and grow from here.
But do you think Blinkit itself can be a lakh crore or 2 lakh crore kind of turnover company in next, in midterm kind of thing? The pace at which you are going?
Yes, it's already north of 10,000 crores in terms of GOV, top line annually.
Yeah.
And
yeah.
really speaking, it is a 1.5-year-old business right now, right? So, and still growing at 80 to 100% year on year. Right? So, I think, and it's a long runway, of course, from 10,000 to what you're saying, 1 lakh crore, but it's, I think, fairly probable that the business will continue to scale. And at some point, we think it's likely to become larger than food delivery. Right? Food delivery today, if you look at the top line, from a GOV standpoint, it's about 30,000 crores. And if Blinkit business continues to double year on year, and food delivery is also growing 25-30% year on year, but at some point, the trajectory of the two businesses in terms of size will cross, I think, in the next 3, 4, 5 years. And from there on, I think both businesses have a long runway to go.
You know, one of the comment against your food delivery business is that it's a fundamentally very low margin business, 4-5%. Food business can have 20-30% take rate and things like that. But in grocery, it's highly competitive, and the likes of Avenue and all, they make just about 4-5% net margin. Now you deliver at home free of cost or maybe some charges. So how do you think of making money out of them?
So our ambition also in this business, our stated objective goal has been that this business should get to 4-5% margin, and that's the goal. Right now we are not there yet, but as the business scales, the gross margins will increase. We're also charging consumers here delivery fee, so that's a big driver of profit as well. And there is then this ad sales, the advertisement spends that brands do on the platform, which also adds to the bottom line. So I think there's some differences in the business models of a modern retail business versus a quick commerce business. But our view is that the margin profile should be very similar in the steady state.
Yeah, Sonia?
I just had one follow-up on Blinkit actually, since we're having this discussion, and I think everyone is really interested in the quick commerce space and the opportunity that it brings up, right? You spoke about the potential for profitability, but I think earlier you had guided for a break-even, EBITDA break-even on Blinkit by Q1 of FY25. Are we on track to meet that timeline?
Yeah, so far we're on track. Sonia on that. So that should happen if everything is predictable and remains, the market doesn't change.
So the reason I ask is because, I mean, you are a market leader in this space by a large amount. I think you're 1.2 times bigger than Instamart at the moment. But I just want to understand in terms of market leadership in the quick commerce space, what are we looking at? What is the kind of opportunity that you see for Blinkit over the next couple of years?
Yeah, so I think it's a fairly large market. I think we're not competing with any one player or a particular format. For consumers, they have multiple choices on how they transact or do commerce in the country. There are the local kiranas, there are modern retail, big box retail format stores. There are large e-commerce platforms, and then you also have quick commerce platforms, right? So from a consumer standpoint, I think all of this are, in a way, ways to transact and buy stuff in India. And that overall market is so large, I think that all of these individual formats can survive and become fairly large and profitable, right? So I think the focus right now, therefore, is more on like how can we solve problems or create more use cases for consumers to transact on our platform. And if you're able to do that well, I think the market is large enough for everyone to grow, right? So, and that's the opportunity which Mr. Ramdev spoke about. I think, it's the offline retail market is in a $1 trillion or more in size, right? And even if we get like 1% share of that, we'll build a $10 billion business. And today we are 1/10 of that. So I think, yeah, that's how we look at it.
Yeah, Akshat, one other thing was that I think you guys started delivering gold coins also. So what are the things which are still not delivered? I mean, you're delivering food, you're delivering grocery. What are the other things Amazon is delivering which you guys are yet not delivering? Because you can deliver everything in less than an hour. They are delivering after a day or two.
Yeah, I think so. The idea is, I mean, for us, the fact that inventory should move fast is important because the deliveries are all happening from a small store, which is located in a fairly expensive real estate in the middle of the demand pockets in the country. So I think we are in that phase where we are experimenting with multiple categories and figuring out, what is it that consumers want and whether it makes sense from an economic standpoint to deliver those things or not. So in that exploratory journey, we've tried many things, as you mentioned. So today, electronics is a large portion of what we sell, beauty, personal care, children's toys, stationery. I think these are all emerging categories where we are seeing a lot of demand from customers and we are seeing economics are also good. So I think we'll continue on that journey and, whatever makes sense from both demand and economic standpoint, I think we'll keep adding that to the store. And eventually, the idea is that we should be able to utilize the real estate behind the business, which is the dark store, as much as we can and increase the throughput. And that's when the business becomes most valuable for all stakeholders.
All right, we'll leave it there.
I just want to mention that I, for one, am addicted to quick commerce, but I'm brand agnostic. Okay, so not a day goes by that I don't order on either Instamart or Zepto or Blinkit. So I must say you're in the right space at the right time. But you want to end the discussion with him?
No, it's wonderful. I think we have a company which is likely to rival the unlisted ones like Amazon, Flipkart. They are the big daddies of e-commerce earlier. Now these are the ones who are. They have done the difficult part, delivering in 10 minutes and half an hour. So delivering in 1 day, 2 days, 5 days. I think it is going to be a huge customer experience, the way we live. I mean, other day, somebody came for breakfast. We changed the way it looks. My table looks very different in half an hour.
Wow. Because everything comes so quickly now, right? Yeah. Okay, well, Akshat, congratulations once again. And thanks a lot for joining in and speaking to CNBC-TV18.
Thank you, everyone.
Okay, well, Ramdevji, thank you very much for being with us here on CNBC-TV18.
Thanks.
Once again, a pleasure to have you with us here, sir. Thank you. Well, it's a wrap on this special show. Thank you very much for staying with us. More coming up in just a bit.
CNBC-TV18, embarking